Crises have proven to be a necessary driver for the development of European integration, but they haven't always led to a strengthened union. While the cause of each challenge must be analyzed, the consequences on the stability of the Union remains crucial. The European Union, the world's most complex democratic institution, started decades ago in the shadow of the greatest and ugliest war the world has ever witnessed. From the beginning days of just 6 member countries through to the present 27 members and 20-member countries that use the euro, it's been a roller coaster all the way. After the US dollar, the euro is the largest reserve currency and the second most traded currency in the world, serving as the official currency in 26 countries, in the Eurozone and in 6 other European countries, officially or de facto. Taking a look at the European Union's economy, it is known that its economy is made up of an internal market of mixed economies based on free market and advanced social models. Making it clearer, it includes an internal single market with free movement of goods, services, capital, and labor. The European Union also has some incredible investment figures. The Union's investments in foreign countries add up to $9.1 trillion. Euronext, being the main stock exchange of the Eurozone, is the world's 6th largest by market capitalization. Its largest trading partners are the United States, China, the United Kingdom, Switzerland, Russia, Turkey, Japan, Norway, South Korea, India, and Canada. Let's consider how big the EU's economy is. The European Union operates as a single market made up of 27 countries, accounting for about 14% of the world's trade in goods. The Union, alongside China and the United States, are the 3 largest global players in international trade. This is why it is rather shocking that the doom of the Union is being predicted. In actual fact, according to a survey conducted by the European Council on Foreign Relations, most Europeans believe the EU could fall apart within the next 2 decades. The study also showed that even though levels of support for membership of the European Union are high, members still remain pessimistic about the future of the body. The survey had more than 60,000 respondents across 14 EU member states. Through it, it was discovered that in every member state except Spain, the majority of voters believe the EU will fall apart within the next 10 to 20 years. In France, 58% of respondents said it was only realistic to say that the Union would collapse within 2 decades, with 57% of Italian and Polish voters agreeing to that. Even in Spain, 40% of respondents said it was a realistic possibility that the EU could fall apart. The data showed that most Europeans saw the collapse of the single market as the biggest loss should the EU break down, followed by free travel across borders and the freedom to live and work in other countries. The Union has some functional malformations which have proven to be challenges to its sustenance, some of which are income inequality. Income inequality is an issue not only in Europe, but around the world. In the EU, the top 20% of the population with the highest national net disposable incomes account for at least 1/3 of total income. By contrast, the bottom 20% of the population with the lowest incomes account for less than 1/10 of the total income. Another challenge the EU faces is in the area of economic growth. Economic growth is measured by the increase in gross domestic product, and it is calculated by taking the monetary value of all the final goods and services of an economy and comparing it to some time in the past. So, for instance, the EU economy grew by 2.4% in 2017, meaning the monetary value of all final goods and services went up by 2.4% over the course of the year. The growth the Union experienced in 2017 accounts for the highest it has had in a decade. Since then, growth has slowed to a more moderate rate. In 2018, GDP expanded by 1.9%. In 2019, it slowed to an unexpected 1.4% and has failed to rise above 1.9% ever since. If the EU will improve the living standards of its members, economic growth is necessary. Yet, many policymakers are of the opinion that there should be less focus on it because it does not account for inequality. arguing that the economic welfare of the majority of people could be getting worse while the economy grows. But it is obvious that the economic decline has done no good either. Climate change is another major challenge the EU battles with. In 2020, the European Commission proposed an EU budget of €168.3 billion, with a focus on smart and inclusive growth. 21% of the overall budget was allocated to tackle climate change, aligning with the ambitious target of spending 20% of the EU's current long-term budget on activities that address climate change. No doubt, the European Union has experienced its share of challenges. It had also experienced banking troubles that have affected almost every major Italian financial institution. Seeing the multiple failures of the Union, in 2016, the United Kingdom voted to leave the EU with the Brexit vote, even though Britain uses the British pounds instead of the euro. In times past, the European Central Bank had introduced negative interest rates in a desperate attempt to spur growth. And for several years, the European economy has responded fairly well. Till date, euro-based countries have serious economic challenges. In spite of the numerous shortcomings, the Union is known for some major achievements. Since inception, the European Union has achieved many great things for its citizens and the world at large. A peaceful continent, freedom for its citizens to live, study, or work anywhere in the European Union, and the world's biggest single-market aid and development assistance for millions of people worldwide. The EU has delivered over half a century of peace, stability, and prosperity, playing an important role in diplomacy and working to promote these same benefits as well as democracy, fundamental freedoms, and the rule of law across the globe. In 2012, the EU was awarded the Nobel Peace Prize for its achievements in this regard. The EU's common foreign and security policy is designed to resolve conflicts and promote international understanding based on diplomacy and respect for international rules. The Union's single market policy has proven to be a major economic opportunity. The EU's main economic engine is the single market. It enables most goods, services, money, and people to move freely throughout most of the continent. It has certainly become much easier to move around Europe because all EU citizens have the right to study, work, or retire in any EU country. As an EU national for employment, social security, and tax purposes, every EU country is required to treat you exactly the same as its own citizens. Also, the euro, which is used by over 340 million EU citizens, has eliminated the risk of currency fluctuation and exchange costs, and strengthened the single market to benefit all. Now, let's take a look at the current state of the Eurozone. According to Eurostat, the European Union's statistics agency, the Eurozone economy expanded by roughly 2–3% on a year-to-year basis from 2014 to 2019, as measured by gross domestic product. The Eurozone enjoyed its best year in 2017 in a decade, showing that it had finally emerged from the debt crisis that threatened the euro. Yet it has refused to grow beyond a certain percentage. Should the economic decline continue, the European Union will be on its way to collapsing. So, what is the most promising way out of this crisis? I am sure you wouldn't have placed a bet on fighting high energy prices. It will interest you to know that the best way out of this dilemma is to directly confront high energy and commodity prices, which are to blame for more than 60% of inflation. In the long run, it will be beneficial to diversify supply away from politically unreliable trade partners and fossil fuel providers, which are objectives that both align with the EU's ambitions for the green transition and greater strategic independence. Hence, the large-scale development of renewable energy inside the EU is the most sustainable approach to economic growth. In the short to medium term, however, nuclear energy and preferential gas contracts with close allies like Norway could fill the gap left by Russian gas. There is no doubt that history holds a valuable lesson in this regard. In the wake of the OPEC oil embargo in 1973, European countries invested in nuclear power and renewable energy to guarantee greater energy security. But with oil prices falling in the 1980s, most of Europe threw caution to the wind and got hooked again on hydrocarbons from Russia and the Middle East. For the sake of Europe's economic and political stability, the Union should be wiser this time. It has been established that the EU has some beneficial economic opportunities. Should the right measures be put in place, the European Union will soar. That's it. We would love to hear your thoughts in the comments. Also, PLS like and subscribe. See you soon.